Good evening, all. Ira Epstein with your Spider ETF stock wrap-up. And this wrap-up is for Thursday, the 13th of October, 2022. What a day. Guess who lost today? Trend traders. You had the CPI numbers come in red hot. I've heard the wise guys say, you can't keep going down on those numbers. But these are the same guys that are just losing every day as the market falls down. Eventually, even a broken clock is right twice a day. You do know that, right? So today was the day that this happened. You had two bearish sets of CPI numbers, headline and core. I made a statement to you, I believe it was yesterday, that even if I knew the numbers, I'm not going to stand on that train track and think I can dodge whatever the market does. Because you never quite know, even if somebody gave you the numbers ahead of time, how the market's going to react to it. Number two, you think you can move quick enough? Did you watch today? You can't move quick enough. You avoid going through major reports. Give the market time. In the stock market, that rule of thumb worked pretty good. If you watch the first 40 minutes or so of trading, it served you well after that. Where it didn't work today was in the future side of it, because that market reacted properly at first to the CPI, and then you saw it. It couldn't hold the break at all. It kept coming back at you. Didn't know what it was until after the fact, and today will go down as one of the wildest trading days in recent times. Certainly the biggest range day since 2 years? 2020, I think it was March. Okay, pretty big. So what does it mean? It means it's a pause in a bear market. It does not mean the market suddenly turned bullish. It does not mean the market is bottomed out. Does it fit in very well with my report that I put out for you that I thought we'd still get a Santa Claus rally? Yes. Got it? Yes. Why? Because you're getting all the bear news at this point in time. And then as we get away from that, and once we get past the earnings guidance and the like, as we come into the end of the year, you heard what I said, once we get past it, we're not past it yet. Once we get past it, I think the psychology will be there. I was very excited about what I saw today. But as I said, if you're a trader, you should have lost today if you traded with the trend. So let's take a look. Tesla finally held a little bit. Remember the blue line that I drew the other day for you? It's been up this week since I started putting this on. You tell me that didn't work out to where the market went. Looking for a support zone. That's all it is. Not a trend change. Looking for a support zone. This market can afford to rally. You had a bear market crossover. If you and I take a look at this market, just to show you and prove my point, here's your bear market crossover. I'm looking for lower and low. I think I got it. So the market can bounce. You're going to have a heck of a time getting through everything that's up there. We don't know what's going to happen yet with Twitter. Now, once the Twitter saga is behind Mr. Musk, this stock can come alive. But it's an overhang. Does he have to sell more and more of it in order to pay for whatever he's got to do with the Twitter? That's the problem. As we look at the market, it's broken away from just hitting the lower Bollinger Band. You have an outside day up. If this low is taken out tomorrow or the day after, the odds put wherever the Bollinger Band is back in play. What else? You have your embedded reading, which means a good hard rally is still going to be sold, in my opinion, by the pros. Likely tomorrow if you have good follow-through, as long as that number stays like that. Netflix was going to get a bounce today regardless, because early in the morning they announced, I think their program is $6.95 for ad-supported Netflix. You can't download and put it on your phone or your PC and watch the movie. There'll be, I think, 5 different commercial breaks altogether with what you get on the different shows. Okay, similar to regular TV with their shows. All right, and the market liked it, but it also liked the fact of today's whole rally. Did you change the trend? No. Where did the market bottom? Do I not teach you here over and over? The first challenge of a key moving average and a Bollinger Band when they're together is where the pros often take money off the table. You never embedded, you were oversold. I happen to think the pros started getting out right in this area. Not waiting for today. In Apple, time for a bounce. Okay. Are we trending? No. Did we embed? No. So you can get a good bounce up here. Why not? This is a darling stock. As soon as the market thinks, oh, the worst is behind it, Apple lights up like a Christmas tree. I mean, it's a huge company. People love their products, and away you go. I get it. But I'm going to look for resistance at 146. Is there a sell signal on the chart? There is not. Disney, still very much in a sell signal, but oversold, never did embed. Gee whiz. What number did it hit today on the way down? What do I teach you when you hit the Bollinger Band to do? The pros come out. That's what they did. What about XLF? What number did it hit today? What do I teach you the pros do on that? Take a look. Were you embedded? No, they took the whole thing off. You just missed it in XLI. That's why I said trend traders got hurt today. And because of the size of the rally, I think they got stopped out of their positions. Okay. If they were short, they lost a little bit. Nothing wrong with that. What do you think XSD, the semiconductors? They started bottoming here. You're getting a bounce. You're not in a trend. You're oversold. Maybe you get to the 18-day average. You haven't changed anything. In the home builders, you missed it by 16 cents the low. Darn it. You didn't change the trend. The resistance is 56.60. In XLE, you have higher lows, higher highs. The resistance is up at 85.67. We're patient. We wait to see what's going to happen. If it embeds, it gets exciting, but not right here. GLD is still bearish. I think the pros are going to sell it at 155.80. I think their stop will be over the 156.81 level. They'll look to see if the Bollinger Band comes into play, but I think they'll be ginger. Why? Because if the stock market gets day two of a rally into the weekend, they'll go, no, hold on. Maybe people don't want to be fighting the headwind of a lower dollar, because if the market's up tomorrow, the dollar's probably down. We pay attention to that. SLV is still very bearish. Today, I was telling my traders first thing in the morning to take partial money off the table on this. It wasn't getting down as much as I wanted it to after I saw and I put this out, by the way, at 9:05. So I had already seen the CPI, and I said, probably a good move to just take some money off the table. Copper market, I don't want you into this in front of the Chinese Party Congress. It makes no sense. I don't know what they're capable of. We wait. TLT, no, back here is where I think the pros came out. If it embeds, terrific. If not, fine. I'll wait for tomorrow to make a decision in the morning what I want to do. Dollar, nah, you reverse course. So you didn't make it for that high. You were getting a market that was in an uptrend that lost it today. You're back to neutral in the dollar. Higher high, lower low. But what numbers is it trying to hold? The 18-day average of closes. And when we get to the euro, what number did it rally back to? It ended its downtrend, but just back there. You haven't changed anything big on this chart in any way. So when I put it all together, do I think that anything big happened today? Other than a capitulation on the downside of the CPI impact. And that did happen today. That's it. Does it mean that the impact down the road won't get worse? No. The surprise to traders would be if the December numbers or the November numbers come out worse. But right now, no. This is October. It was a surprise that they were bearish. People think that you're peaking. Nobody talks that they're embedding and getting worse. Nobody. I watch TV. Nobody. Everybody is saying, no, we see light at the end of the tunnel. I'm the only guy that says, when I see it, I'll tell you that we've seen it. I haven't seen it in core CPI. Show it to me, okay. But it's not going to collapse. You're going to be stuck with high interest rates for a year to come minimum. This Fed is not going to back off. Remember what I said. So I understand you want to be euphoric tonight, especially if you're stuck in the market. And yes, I'm for you. This could be the spot on good rallies. You lighten up a little bit more on a good rally. And no, I haven't changed my mind. I still think Santa Claus is coming to town at the end of the year. I have not changed my opinion. In fact, if anything, I think it solidified itself today. So with that, remember, if you want to keep up with these markets, especially for those of you that so often are trading TLT, USO, DIA, IWM, the stocks, the silver, the gold, and all that, you want to see what the futures are doing. If you don't, you're trading this way with your hand behind your back. You want ideas of how they're progressing through it. What do you think Jeff Curry of Goldman Sachs is on CNBC for all the time? He's a commodity guy. But it's all about GLD, GDX, SLV. That's what they're doing. We do the same thing. How do you get this information? Because we want to put it in your hands. All you need to do is go to our website at www.iraepstein.com. When you get there, free offers on the top left. If that's a little difficult, I have another way. Follow my magic finger. Go to the top with your cursor, give it a click, and look at the other offers. My updates for free for a bit, charting software, all our different packages. I'm Ira. Use today. Learn from a day like today. And I'll talk to you over the weekend. You won't see me tomorrow evening. You'll catch me over the weekend, though. Take care.